Hi everyone, welcome back to the podcast. Today's guest, Investing with Wes, a content creator and value investor. So thank you very much for coming on today.
Thanks for having me on. I appreciate it very much.
No worries at all. So I think I want to start with what got you into the stock market. How did you start learning about investing?
So it all began around March 2020, I would say. That was when, everything was just falling. I and I got into the market around then. Before that, I did want to get in, but I needed that push to actually get started. So I got that push from like a family. He said, I told him I'm interested in the stock market. He said I should go for it, see what I could do. Because my goal, at the end of the day was to build, personal wealth and just see what can happen. And so I got in around March 2020. I didn't know what I was doing. It was just like a whole new world to me. And the first thing that I bought, like my mindset was, I buy something. It was the future. I buy something and it will go up. So I bought like all the travel stock, like Carnival. The I bought through airplane companies like EasyJet, few of them like Delta and all them ones, the travel stock that got beaten down. I also bought some, companies like Jumia. I bought um, Virgin Galactic. So I was buying everything, because I had the mindset that these things were going up. I don't know what drove it up, but it just happened. So I did that, and let's say fast forward a year later, the market recovered slightly. Everything was just going up. I was on top of the world. I thought I was a genius. Um, I just had this feeling like there's something wrong here. Like, why is it like, why am I come into the market 3 years, like a few months later, I'm just winning. So I just started questioning the way I was approaching things, and that's when I just started going online, see what I could find. I stumbled across like Warren Buffett, and when I started listening to Warren Buffett, I just started, just searching on YouTube, and that's when it clicked to me. The way I was investing was not the correct way. So I dedicated a few months to just learn the basic principles of investing, which is you're buying a business, you're buying a company that produces cash flow, and you need to conduct fundamental analysis. And I was not doing that. I was not looking at the financials. And once I got that installed into my mind, I completely sold everything and I made around 55% returns. I just got rid of every single thing. And that's when I just started, dedicating time to just learning about how to invest like intelligently. And yeah, that was it really. Then I started buying into my first companies. Of course, when I started this, new approach of investing, you're not going to be perfect. So, I didn't get it right the first time. So made a few errors, but now in today, I would say, yeah, I'm in a good spot. I know how to navigate things. I know what I'm doing, but at the end of the day, I'm still learning. So yeah.
Yeah, what was it that made you realize that things weren't right? Because a lot of
Mm,
people, like myself, got into the market during
mm,
that time, and we saw so many stocks going up and up and up. Like it was easy to get carried away, and
mm,
if you keep seeing those like amazing returns, a lot of
mm.
people would have just kept on with the same strategy. So, what was it that finally pushed you to realize that this couldn't go on forever?
I think, to be honest, I think the more I learned about the market, it just started made me question the way I was approaching things previously. So yeah, the more I started learning about the market, the more I started watching a lot of YouTube videos, reading books and stuff like that. That's when I started to question myself deeply. Most people, as you said, when they're making those crazy returns, a lot of people did make those crazy returns, but they still hung on to those. And fast forward till last year when everything took a turn, they've completely lost all those returns. So for me, it was questioning the way I was approaching things early, and from there, I knew, yeah, I had to change my mindset, and that's when I got rid of everything, started again, and here I am today.
Yeah, well, I was very similar, and I was lucky because the reason I sold a lot of my growth stocks near the
Mm.
peak was actually because I was transferring my ISA from one platform to the other. So
Yeah.
I cashed out, and then when I moved over to Trading 212, I decided to kind of go in a bit more slowly.
Mm.
So I was quite lucky that I actually cashed out a lot of growth stocks because we've seen kind of a bit more of a investors flocking a bit more towards value recently. Um, so would you say you kind of model your own investment approach off of like a famous or well-known investor? And what kind of tools did you use to and resources to find out more about those investment approaches?
So when it comes to the stock market, a lot of people like to say value versus growth, but at the end of the day, with value, you need growth. Like I don't think they're different. The only difference is some people think value investors look for slow growing companies that pay a dividend, or they're growing 2%, 3% a year, but that's not the case. To me, value is something you're buying less for than its conservative worth. So you can apply this to any company in the stock market, whether that's something like a Tesla or something, I don't know, like Nvidia that's growing really fast. But the way people in the modern day, they think, like the growth is a separate thing when it's not. All you're doing in the stock market is finding something and paying a lot less than it's worth. So, and you can just apply that to anything. And to answer your question, for me, right, I just wanted to see, how people who are successful at it done it. I looked at Warren Buffett, I looked at Seth Klarman, Howard Marks, all these great investors who follow this value approach. They all have different niche in terms of how they find value. Like Warren Buffett, he likes to, look at established companies because he has to. He can't look at anything else. Then you have Seth Klarman. He looks at more, you know, private equity. Sometimes he looks at special situations. He looks at all kinds of things. And Howard Marks, he looks at distressed debt. But yes, they're all value investors, but they all have a niche that they target, and that's how they make the return. So I kind of look up, okay, which one of those approach fits me best, and that's where I kind of get a gauge of how I want to invest. So yeah, I hope that was able to answer your question.
Yeah. So what are the kind of um, different aspects you look at when you're looking for a stock investment? How would
Mm,
you approach it, and how would you decide that this is a good opportunity?
mm. Yeah, so when in my investing approach, I have a checklist. So the checklist prevents me from, investing in things that don't make sense and that will cause me, to lose money. So I have a strict checklist that before I even, buy a company, I compare the company and the check to see if it fits what I'm looking for. So it puts things into perspective and context, the checklist. So once I go through the checklist, and I understand the company, that's the key thing you have to do before you look at a company. You have to understand it and make sure it's in your circle of competence. And for me, a lot of things are not in my circle of competence. I know my limitations. For example, I don't invest in banks, energy, any emerging industries, like EV, and all that stuff. I prefer more consumer staples, media, those kind of things, digital advertisement, technology. So you want to make sure the companies in your circle of competence, and once you find a company, compare against the checklist, then you want to do fundamental analysis. So for me, I like to see, okay, is the revenue growing? That's good sign. Is the profit growing? That's a good sign. What is its debt? What's its profit margin? What's its return on invested capital? What's its free cash flow? And free cash flow is the most important thing, because that's what's going to drive the business value in the long run. And your job is to pay as little as possible for that future free cash flow.
Yeah, and are there any particular tools you're using? And you mentioned the checklist. What kind of
Yeah.
things are on that checklist as well to that makes you kind of decide, okay, I'm going to go into this position now?
Okay. So when I'm like analyzing the company, um, the first thing I look for is revenue growth over, let's say, 5 to 10 years. Then I like to see profit growth over 5 to 10 years. I like to see a good positive trend on those things. If it's like jumpy, when you get like cyclical companies where they have good years then bad years, that's another thing. I don't invest in extremely cyclical companies. So yeah, to go back, I like steady, predictable revenue, profits. I like to see profit margin, let's say over 10%. Even if the company doesn't meet over 10%, I like to put into perspective. For example, if it's like a retail, they might have 7% profit margin, and that's extremely good for retail. But if it's like a tech company with like 10% profit margin, that's concerning. So it's about putting things into perspective. So profit margin is another thing. Return on invested capital, that's another extremely good thing. I like it over 10%. So return on invested capital is how good the business is at investing itself for future profit and the returns they get. I also like to look at a metric that looks at debt. You can look at debt to equity ratio. You can look at the long term cash flow compared to the debt, and yeah, and also like to see a positive trend in the free cash flow. And those are a few things that I look at.
Yeah, yeah, great. So for somebody who's maybe new to the stock market and
Mhm.
they're trying to gain that confidence, what are kind of the key things you can recommend to like a new investor when they're starting to get into investing for the first time?
Okay, so the way I would recommend someone to do it, and the way I got into it. So I go into the stock market. Don't be in a rush, to buy to buy. Yes, we want to get started quickly, but that's the worst thing you can do. Just be in a rush and just buy. Just learn. If you wanna, what I suggest is just stick to some index funds for now, and once you have that confidence, you want to pick individual stocks, because individual stocks is not for everyone. If you can't value a business, then you shouldn't be buying individual stocks. So just slowly, because what I did was I started with a small portion of index fund. As I gained that more confidence, I started shifting to more individual stocks. So you want to be reading books. There's some very, very good books out there for beginners, like The Little Book That Beats the Market, Acquires Multiple, Intelligent Investor. Some brilliant books to get that mindset.
Yeah, yeah, I think that's a great point because I think a lot of people when they hear about the stock market, they think that this is a quick way for me to build wealth, but we all know now that it's all about the long term. So do you remember like any mistakes you made, or do you see many people making the same mistakes, maybe through the people kind of following you on Instagram, and what do you see kind of misconceptions about the stock market from your followers?
I still see there's a lot of mistakes. Some people, they're not valuing the business; they're just buying it because it's gonna grow to the sky, and that's a mistake. A lot of people, they're still speculating in non-profitable companies, negative free cash flow companies, and they're just investing because of the FOMO. Like, that's dangerous. Like, for me, I'm fine missing out on a company. If I can't understand it, I'm fine. If it goes from $10 to $100, I'm fine with that, to be honest. But you just gotta, have the right mindset, and don't, just jump in.
Yeah, there's almost a danger as well if you hit like a 100% return on your first stock. You almost then gives you a false kind of sense of confidence that you're going to keep finding those 100% returns in short periods of time. But um, yeah, I definitely agree with the points you made. Like, know what you're investing in, and know that it's a long game. So get into the positions slowly when you understand the business. I think that's a great point.
Yeah.
Um, what do you think about kind of individual stock picking and kind of the social media space as well? Because um, a lot. Is it possible for most people to beat the market? Do you think that? And if so, um, kind of do you think that social media is now playing a role in helping people educate them, or there's also a danger to it as well, right?
So yeah, I'd like to touch on that. If I don't answer it, feel free to answer it again. So social media, I think social media is a great place for people to learn, but you got to be careful out there. There's a lot of bad. bad advice out there. So you just got to be careful, really. We've seen in the last, let's say 2 years, there's been a lot of bad advice. Like, buy these 10 companies, they're gonna 10x your money in the next 10 years. And yeah, for me, I was starting off with the Instagram within that period. It was upsetting to see, because that's what people wanted to see in the market. They wanted to see those kind of, posts because they get the most engagement. So for me, in terms of like my page, I try to provide more detailed analysis in what I do. So I like to do like a deep analysis. So to try and if someone sees my post, they can form their own opinion. I try to stay neutral. Like, I post all sorts of companies. I stay neutral, and I post the facts. And if people want to interpret it a certain way, they can. But I just try to stay neutral on the company. And in terms of like, the positive side, it is very helpful sometimes. You meet a lot of good people. um for me, in terms of like finding stock ideas, um I think if you're finding stock ideas, you don't want to look at social media, because for me, my investing approach is, I want the stock to be obscure so no one knows about it, obviously profitable and cash flow generative. So that's how I kind of modeled the way I approach. I feel if you invest in companies that's blasted on social media, blasted on CNBC, that's going to lead to negative returns because people are going to be bidding it up and up.
Yeah, I'm thinking about like the GameStop situation, for example. It's like there's only so many people who are going to be able to come out of that with a positive return because the price has gone way beyond the kind of actual value of the business itself, right?
Yeah, yeah, completely agree.
Yeah. So, um, is there any like when you first were kind of shaping your own investment approach? Was there any particular like YouTubers or people that you took a lot of advice from and kind of shaped your own approach?
To be honest, I mostly watch a lot of the super investors to just, you know, gauge and how, I want to model my investing approach. Um, these days, I rarely watch YouTubers. I just watch super investors. The old talks from like 20, 30 years ago. I mostly read books. So it's very, very rare for me to watch like an actual, like, normal retail YouTuber. I just mostly watch, super investors.
Yeah, yeah. And what are kind of the common investment strategies you see kind of by these professional investors? Like Warren Buffett obviously has his own very unique style, but
Mhm.
um, there's kind of different ways to adopt it yourself because obviously you want to have your own unique strategy, right?
Yeah, so Warren Buffett, he obviously prefers, um, you know, great great businesses at fair price, because he has billions of dollars to move around. He can't go and buy a $1 billion company, can he? So that's his approach. And I feel if you're a normal retail investor, that's a mistake to copy him on that sense. I'll touch on that in a second. Also looked at Howard Marks. He invests in distressed debt. I'm not smart enough to look at distressed debt. So for me, I model my approach around Seth Klarman and Joel Greenblatt. So they normally look at special situations and small cap companies. So for me, I like to look at companies below $10 billion market cap and special situations. So, special situations involves company doing spin-offs, merger arbitrage, cash payouts, those kind of things. So for me, I really want to get those outside returns. And I think if you're normal retail investors who haven't got Warren Buffett's wealth, they should be looking at those kind of, opportunities, because that's where the real money is. Because not a lot of people are doing it, and with those companies, they've got less eyes on it, so not a lot of analysts are covering it. So yeah, you really got to do your work in that sense. And I like it when no analysts are covering the company.
Yeah, yeah. So when you're kind of holding your position, is there anything that you would notice that would make you consider selling that investment, and what kind of things are you looking at when you're holding a company?
So if I sell an investment, there are a number of reasons why I would sell an investment. It's got so overpriced where it makes no sense to own it. I clearly made a mistake. A lot of people I noticed they know they made a mistake and they're hoping they'll break even just to sell it. That's a mistake. Once you realize you've made a mistake, get rid. Like you learn from the mistake, move on. Also, sell it if I notice the fundamentals are deteriorating. That's another thing. So yeah, those are, or if I find an equal attractive investment, I would sell the company and buy the other investment that looks more attractive. So those are kind of the things that I, look out for in terms of the sell side.
Yeah, when you when you're looking at potential stocks, what kind of return would make it like attractive enough in terms of kind of risk to reward? Because um, obviously you said if you found like an opportunity somewhere else, you would sell. Um, yeah, is there like a price in mind, that like a percentage return you really want to achieve on your positions?
So I want to try and achieve a annually 15% return on my performance wise. So that's what I try. That's my benchmark really. Really, and that's the one I stick with. So if I have a company it's looking to yield me 10%, and elsewhere I find a company that's looking to yield me 15%, 20%. If I don't have the cash, I'll probably sell that 10% and go into the 15%. So for me, when I'm looking at investments, I'm looking on the downside first. Like I don't know how much these companies are going to go up by. I'm not thinking about it. I'm just thinking about how much can I lose, because I
Mm.
think you don't want to. You really have to think about how much you can lose really by investing with margin of safety, because if you're investing and let's say your portfolio drops 20, 50%, 50%, then it's going to be very hard for you to compound wealth. Like it's almost no return.
Yeah, that's rule number one, as Warren Buffett says, don't lose money, right? Because even though it might sound like a small drop, 20%, that is going to take a lot more than 20% to get back to where you were originally. So,
Yeah.
what's your kind of approach with the margin of safety, then, in terms of like how much you're willing to accept?
So when I'm doing so for me, when I'm valuing the business, I use like a return rate as my margin of safety. Also, there are other factors you can do to help, make the margin of safety bigger. Like I like to, when I'm looking at a company, I like to value on the worst case scenario. So if I value on the worst case scenario, it's hard for me to lose money. And yeah, and I also, yeah, that's about it really. So I like to use the return rate of 15% and value in the business on the worst case scenario.
Yeah. Do you think? So, what do you think about the market at the moment? Then, when you're looking at kind of the where the S&P is right now, is there any stocks that are standing out, in terms of like really appealing to you, or and how do you see kind of the next few months playing out, with everything going on with inflation and interest rates? Right, it's quite a lot of uncertainty right now.
In terms of like the US market, I think it's too expensive. For me, I'm
Mm.
finding value elsewhere. Like I'm fishing in the UK. That's my hunting ground for the last year now. Obviously emerging markets. So yeah, that's where I'm looking at right now, to be honest. Just the
Yeah,
UK
yeah,
and yeah, emerging market.
yeah. The UK. There was quite a big dip right around the time when we had kind of the change in prime minister.
Yeah.
Um, uh, did you find, what kind of UK stocks are you interested in? Because um, yeah, I don't think the UK market gets much interest from kind of like US investors, right? Because kind of UK companies aren't as globally well known, right? But there are good deals out there.
Yeah, I completely agree with you. So in terms of like UK companies, right? I hold I hold Dr. Martens, Wix, um, Airtel, I own Future, I own Frontier. I think that might be it in terms of the UK side, but I've done big write ups on other UK companies. So I've done write ups on SDI Group, Catebox, um, Supreme, and there might be another one that I'm forgetting. But most most these days I'm mostly writing and looking at UK companies. I think there's a lot of value there.
What about Asian markets? I'm thinking about stocks like Alibaba right now. I think are they look quite cheap, but there's also been a lot of rumors about like, are Chinese stocks going to get delisted? Are we? Is it safe to invest in them? Kind of, because we're not like there's kind of like when you're buying the Alibaba stock through the US market, are you actually the owner of those shares, or is it kind of through like a holding? What do you think about kind of investing in China at the moment?
I think with China, uh, in the next 10, 15 years, they will be the number one economy in the world. They're growing fast. The story is interesting how they got the whole country out of poverty. In terms of like investing in China, um, I don't think they're going to get delisted. If they do get delisted, that's like, I don't know, that's a lot of value wiped off the US market, and that's not going to look good. And even if they do get delisted, depends which broker you have, they can easily convert it to the over the counter. So on that aspect, I'm not concerned of delisting. In terms of political risk, I don't think the Chinese government wants to, delete like an Alibaba or Tencent off the map, because China, in order to be the number one economy, they need Alibaba, they need Tencent, they need all these strong Chinese companies. So what they were trying to do is to make an equal playing field for all. So yeah, that's what they're trying to do. And if it's an equal playing field for all, then it prevents monopoly and unfair practices.
Yeah. Um, I had a question from one of my followers about kind of investing in overseas markets. About do you track kind of the fluctuating currencies, and how does that how do you track that against the share prices? I think that's quite difficult, especially with the pound recently was kind of had a big fluctuation. So is that something you track, and how do you do that?
So in terms of like currency, of course, it's a risk to have in the back of your mind, but it's not something I pay attention to too much. Like it's gonna happen. Like sometimes your currency will be in favor, and sometimes it's gonna be out of favor. It's just how things are. But in terms of like me, like in terms of like performance wise with the portfolio, I just have this, this website that I just use to just track how my performance is. But in terms of currency risk, it's not something I, worry about. The macro stuff is not something um, I look at. If the value is there, the value is there.
Yeah, yeah. Um, so what was it that inspired you to kind of start posting your kind of stock market content online? And how have you found that? I mean, I think you do some great deep dives and analysis. But what was it that kind of inspired you to start posting it online?
Thanks for the compliment. And so on my personal page, I'll just usually just post random, stock things that I find, and one day, my friend, he started an Instagram page as well. I met him online. He asked me, since you're posting on your personal page, why don't you just start, an Instagram for finance? And I thought, you know what, I started it. Um, and ever since then it's grown pretty good. I've met a lot of good people. A lot of people seem to like the content. A lot of people engage with me. I engage with them back, and from there, it's allowed me to start many other things. So yeah, it all started with my friend, just that I met online. Just tell me to just start a finance page.
Yeah, yeah, the same with me because I started talking about it on my kind of personal platforms, and
Mm,
people suggested, oh, why don't you create kind of a separate finance page, and it kind of took off because I think
mm,
Yeah, personal finance is quite a hot topic at the moment. Obviously, the UK economy is not looking great for the average person with the kind of cost of living crisis. So I think it's super important that people kind of learn about investing, right? And I think we as influencers are able to promote this to a lot more people than might have known about it otherwise.
Yeah, completely agree with you right there.
So, what's your kind of plans going forward with your page and your content?
So more of the same, really. Just keep educating people, um, and also keep with the articles that I write. A lot of people seem to find value in the like long write ups that I do on individual companies. I'm enjoying that as well. It's growing rapidly, so just more of what I'm doing currently.
Yeah, and um, how many stocks do you hold then in your portfolio? And obviously you, because you're doing a lot of deep dives into these companies, are you looking at them, and then if you like what you see, you adding them to your watch list, or um, yeah, how many stocks do you think is kind of a good amount for someone's portfolio if they're looking to beat the market?
I'd say around 20 should be good, 15 to 20. I think I currently on around 12. It's not by design, but it's just there's not many opportunities there. So yeah, I currently on 12, and I think in terms of beating the market, there's a few factors you're gonna have to have in consideration. So you can't invest the way everyone invests. Like you can't go be buying Apple, Google, Microsoft, and all these companies, or else you're just gonna be like everyone else. You need to be something. You need to do something different compared to everyone else. So that's one thing. You have to have some sort of insight, whether that's how you put things into context, whether that's informational, whether that's analytical or behavior. That's another thing that you need. And you also have to look in obscure places that no one else is looking. Once you have all those things, I think, and you control your emotion, I think you're gonna have a good, long, successful investing career. And also maybe slightly concentrate your portfolio, not go 50% in one company or something. If the opportunity is there where the downside risk is so low, don't be afraid to just put a little bit more extra in it.
Yeah. So, what's your opinions on kind of diversification and in terms of different industries, different types of stocks? Do you think it's okay to focus a lot of your capital into one area if you have the confidence? Because, like you said, your approach, you want people to kind of have their own unique approach, right, and go against the crowd. So, what's your opinions on kind of managing risk with your diversification?
So with the whole diversity, I think people like to force it within the portfolio too much. They say I must have 10% healthcare, 10% energy, 10% REITs. I think just stick to what you understand. Like I don't understand a lot of things in the market. Like it's not something that I feel like I feel comfortable investing in three or four industry that I know inside and out. So stick to the industries that you have passion for, and just go from there. The portfolio will build itself. So I think when people say you gotta have exposure to this, exposure to that, I don't think that will lead you to just invest in things you don't understand. Like people say I should have exposure to bank, insurance. I don't understand those stuff, so I'm just sticking to what I know, and that's gonna help me, over the long run.
Yeah, yeah, amazing. They're all great tips. You say you're quite contrarian then in your investment style?
I mean, if you want to have a long, successful investing career, you have to think differently from other people. You don't do it for the sake of doing it. Like you have to be right on right, or else you're just gonna get screwed. So yeah, you need to be right on your judgment.
Yeah, agreed. And um, so yeah, I think the top three things we kind of if we summarize like your approach and your advice for new investors, then it's kind of um, to go against the crowd, focus on what you know, and do your research. Is there anything else you think kind of for tips for new investors uh, that you can recommend?
So when you're going, so with the whole going against the crowd, it's not easy because if you buy a company, it just keeps going down while everything's going up. Psychologically, it's going to affect you, and you're just going to sell it and just buy the things people are buying. So be prepared to have periods where you're underperforming, and if you combine doing things differently as well as combine investing in what you know, then you will do pretty good over the long run. Just stick to what you know.
Yeah, yeah, amazing. I think yeah, that's really good advice. So um, yeah, I think uh, that's all really good and really helpful for the listeners. I know a lot of my listeners are people who are kind of just getting into investing.
Mm,
So I hope all of these tips are
yeah.
valuable.
Also, one more thing:
Yeah,
don't focus on this different stock types. Like penny stocks, growth, dividend. Just focus on owning businesses that fits your criteria. If you wanna have a niche where it's focused on you know certain companies, make sure they're generating profit, but don't put emphasis. I need to have an allocation of 20% dividend, 20% growth, 20% value. Like I don't like to box stocks into categories. I just look at them as individual businesses, and if I could understand them and have a high degree of what it's worth in 5, 10 years time, I'd buy it.
yeah. So focus on the company rather kind of than on the stock, the type of stock, right?
Yeah, exactly. Yeah.
Yeah, brilliant. Um, yeah, where can people find out more about kind of your stock analysis and your content?
So I'm on Instagram at Investing with Wes. I'm also on Twitter at Invest with Wes1.
Great. I really appreciate coming on and discussing. I think that's very helpful for the listeners. But yeah, thank you very much.
Th-
Appreciate the time.
Yeah, thanks for having me on. Hope everyone find this valuable.